Welcome to Trading Lounge and the US indices. We'll be looking at the SP and the NASDAQ. I'm still away from the office, so use emails rather than telephone calls. So for the S&P here, we're on track. We're looking at wave 3 here, triangle pattern of an A, B, C, D and E for wave 4, and then we're up for wave 1 here and back for wave 2. So within all of this, we're working our way from wave 2 into wave 3 here, and within that between 2 and 3 here of minor degree, we're looking for 5 waves of minute degree in blue here of wave 1 and 2, and then wave 3 here, which will also have 5 waves in here. That's where we are now. Then wave 4 and wave 5 for a larger wave 3, and then wave 4 and then wave 5. So a fair way to go in this bull trend. We're really, I guess, from the beginning of wave 1 here up until we get to wave 5 up here, this would be the center right here of the whole structure. So we're halfway through now. So let's dive into the 4-hour chart and pick up where we are here. So from blue wave 2 and green wave 2 going up into green wave 3 here, we're looking for 5 waves within this structure here as well. So from the 4-hour chart, from blue wave 2, green wave 2, and then we're going up into green wave 3. Last time we spoke, we were in here somewhere, and we were looking for an A and a B and a C correction here that's panned out quite nicely. So we should see a move up from here. We are currently long in this. We can bring our stops up into this position here under these lows here once we've got support on top of 2,900 here. And of course, in terms of actually going long here again, we would normally have this as the reference point up here. Then we can bring it down to here, and I'll just leave that there for a moment, but I'll copy one. And we can also have one here as well. So we'll look at this in a little bit more detail here. Once this structure up here finishes, and it will be in 5 waves up here. We're looking for 5 waves to take us to roughly the 2930, and that will be the top of group 1. If I've made a mistake in this area and we get support on top of 2930, well then we'll trade long on a reference point high at that point, but otherwise we will look for another ABC correction, the same as this one here in 3 waves, an A and a B and a C, but this one here will be should be larger, 60% larger than this one here. So we'll get to that when we get to it, but I'll just save that and we'll go into the hourly chart and pick up that thread. So from here we've got a reasonable A wave, a B wave and a C wave here. So this was also a buying opportunity here because I put this box in green here. So if you bought, that's fantastic, but that's okay if you haven't, because looking to find support on top of 29 here, and the way to do that is we know that we'll have the arrival, the reaction, the first high above the level, and then we'll have another little ABC correction, and then we'll push up from that point. So it hasn't got that first high. I mean, if it's going to fail, this is where it's going to fail from, and what we're looking for here is the first push upwards above the level to take some of the supply out of the market, the wind out of the balloon, so to speak, and the second time then it gives us our reference point, and then we can move through it on that point. We are looking for 5 waves up in this section here. So it'll be something like 1 and 2, and normally the third wave can come in around the top here, 4th wave and 5th wave coming into here, and then with this move coming down through here will be 5, I'll just put it here, 5 waves here, 3 waves here, and 5 waves here, and then we can look to buy again in this point here. We can move this stop loss into this section now, because we don't, I mean, it's not much difference, and we don't want to put ourselves at unnecessary risk. And wave 4s can get complicated too, so we just need to be a bit mindful of that. We'll look to take profit between the 29.20 and 29.30 at that point, so we'll save that. I don't think the tick chart can really bring us any more detail than what we have here. Not really. No, so I'll just leave that at that. We'll look at the NASDAQ tech stocks. So the NASDAQ has got the same count as well, so wave 3 here, an A and a B and a C and a D and an E wave here, and we're looking for a move up into 8,000, which would be our target area up here. 8 is the third strongest number in the market, so 1 first, then 5, then 8. And we consider 8 a profit-taking number. Well, I consider it a profit-taking number, so that means that when we get to 7,800 here, we'll also see that as a correction here. So the 7.8 would be a target area here. The levels coming up here are the Fibonacci numbers as price ratio. So from 7,000 we've got 100, 200, 300, then 500, then 800. Halfway between 500 and 800 is also important, and that will be the 7,650, and that's where the market is dancing at the moment. So let's go in and have a look at that. So I would just expect a correction across the 650 number here, and as I always say, the 700 is important and the 600 is important, but I find the 650 more useful in terms of trading, because it gives us our balance point for the next move to the upside. So in this case here, if you want to go along here again, then you want that number there as support. We'll just clean this up, we don't need this anymore. So we're looking for 5 waves up into wave 3 here, so making a new high above these levels here, and then once we've got that, then we'll be looking for a pullback, the same as the S&P on this here, and this is where this will play out quite nicely here. The 650 is a nice support a little bit later on in the game. So on the hourly chart here, this is just another scenario that I'm going through. I'm not sure if I've got this degree wave 4 or this degree wave 4. Not that it matters just yet. We've still got, one way or another, we're still going to make a new high above these highs here. I think it's, I don't think that this is the case, so anyway, I'll just leave it there for the time being. Long trades will be on the 7,650. That's obviously the balance point within all of this correction here. So wait for support there, and support in that instance would be the arrival, the reaction, the first high above the level, giving you that reference point, and then there'll be some sort of correction. I'm probably dramatizing the sides of it here, and then up from there. So if you see that on a, this is an hourly chart, but if you see that on a tick chart or 5-minute chart or 15-minute chart, then you'll know you want that as support. That's the main thing. So trading above a number is not support. It's when it falls back and picks up the volume again and then pushes up and finds support, then you've got support. I don't think the tick chart can tell us anything else here as well. Let's have a quick look. It still gives us the 650 here, which is kind of important in a way, because I always like to get the 50-60% retracement level. And I can see that, you know, if this market was going to fail, that's the number it would fail at, the 7,650. It's the 61.8% retracement level of the last segment here, and it could be construed as an A wave, a B wave, and a C wave to this point here. I don't think it's the case, but there certainly will be reaction from that 650 there. So any long trades would require support on that level, and of course you've got your indicators and so forth, so you might be able to buy the pullback within that, but the risk is buying under that particular number there. You're on the wrong side of the market, which to me, being on the wrong side of the market is being on the wrong side of the closest, largest, important number. Okay, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.